I will introduce Nadia. Nadia is the head of our bookkeeping division. This is a topic that she's really close to having to grapple with for our own clients in this space. So welcome, Nadia. Thanks for joining us today.
Thank you, Phil. Hi, everyone.
We also have Dylan joining us. He's one of our partners in our compliance team, so tax and structuring, all of that part of the world. Yes, has a keen interest, I think, in this space, more so probably from a cash flow perspective and what the impact is going to be for clients in that way. But thank you, Dylan, for joining us.
Thanks, Phil. Morning, everyone.
I think the large number of registrations on this webinar is probably an indicator that everyone's starting to think, oh, yeah, we really probably should get our house in order. July 1st is going to hit us before we know it. So good on you for joining today. This is an express webinar. So our webinars are usually called a masterclass. They go for an hour. We're going to try and get through this one in half an hour. I know everyone is really busy. This is an important topic, but we reckon we can probably do it in half an hour. So that's the plan for today. If you're joining us for the first time on this webinar and you don't know what we're about, just a real quick one. We have 4 pillars to our business. Just at the top, though, we are just focused on building and construction as a firm. So I know a lot of firms kind of are fairly generalists, or may have some people who look at building and construction. That's all we do day in, day out. That's our primary focus. We do that across 4 key services. So our tax and compliance division, who are all about structuring your business so that you can minimise, not avoid, minimise tax wherever you can and protect your assets, particularly if you're doing things like property development and higher risk activity like that. Bookkeeping, Nadia is here representing bookkeeping today. This is all about you not having to worry about this sort of stuff, outsourcing it to experts who understand bookkeeping and that function from a construction industry perspective. So Nadia and the team know all about all the job costing processes you need to have in place. They know all about payroll and all those sort of aspects of bookkeeping, and we know all the technology and how it all fits together as well. So if you're sort of sick of the headaches that come with that, Nadia is here to help in terms of outsourcing. We then have 2 other advisory services, financial control. So this is all about management reporting over the top of your bookkeeping, so you can see how you're traveling in terms of your margins, job by job, and then future forecasting as well, so that you're not hit with surprises. So that's financial control. And ScaleX is all about growing either the top line, so helping you grow your business safely from a top line perspective, or improve your bottom line, or both, in terms of the quality of earnings in your business. So led by CFOs in that space. Okay, today's agenda, we're going to go through what is this change. We're going to then talk through how this change is going to play out in practice. So we're going to kind of get into a bit of the nitty-gritty there. Then we'll talk through the cash flow implications, which I think is the biggest aspect of this change. There will be some technical changes in terms of how you're going to approach pay runs. But mostly, I think the big thing here is about getting through this cash flow hump. And then we've got some resources that we'll share at the end as well. Okay, I'm going to run this quick poll just out of curiosity. We want to know, how ready are you for this change? So Payday Super readiness on a scale of 1 to 10, 1 being what it is, Payday Super, I don't even know what it is, through to 10, I'm already doing it. So I'm already doing paying my super at the moment when I run my pay run. This is interesting. We've got half of, it's getting up there, about 70% now, and it is massively spread. So we've got we've got around 10 people who are already doing it, already doing Payday Super. So well done to you, 10. Actually, you might be able to help us out along the way. The rest, though, are pretty evenly distributed, with most people, though, at halfway, which I think is probably about right. There's a little bit of awareness around, but we're still trying to work out how to get ready for it. Okay, so that is that one. I'll just quickly share those results. There you go. You can see that distribution. Okay, let's get into it. So firstly, I might come to you first, Dill, and we might just talk through just at a real helicopter level, what are these changes, and a little bit of background on why these changes are coming into play.
Yeah, so thanks, Phil. So quickly, just to jump in, now currently quarter is due 28 days from the end of the quarter. So you effectively could get away with just 4 payments in the year. The ATO has seen non-compliance go through the roof, so they've moved to the Payday Super approach, which is matching your super obligations with your actual pay run. So if you pay employees weekly, you now have to pay super weekly as well. So that's effective from the 1st of July 26. And it's not similar to previously, it's not the payment date of when it leaves your bank account, it's when it's received by the super fund, the employer's super fund.
Okay, so over to you, Nadia, in terms of just the breakdown of what these rules actually look like, or what's the new playbook here. So talk us through this 7-day rule and how that's going to apply.
Yeah, thanks, Phil. So the 7-day clock starts on the day that you actually pay the payroll. And it's advisable that you do your payroll at the same time as your last process on the payroll. And it can take up to 5 business days for that payment to actually drop into the super funds. However, it takes around 24 hours for it to leave your bank account. So don't leave it for too late. It is going to reach your super fund within 5 days.
And I think that's, obviously designed so that there is very, very little wriggle room. I mean, they're really encouraging, I think, people to not have this as a separate process so that, really you don't have the liberty of time for that to be the case. So really it needs to be aligned with when you're paying. And so then the other parts here, so the per payday and the fund receipt date.
Yeah, so it takes up to 5 business days to drop into the super fund. However, it leaves your bank in 24 hours. It is also good to check that every day after you've processed it to make sure that nothing has bounced back.
Yes, indeed. Okay, and we're going to get into some of those processes in a minute as well. So every pay, and it has to hit the fund within 7 days for you to be in the clear. So a little point here, just a sidebar in terms of, will the ATO find out about this? We don't like to have to run webinars about this where it sounds like we're the police, but I guess it's our job to inform people of how the compliance works in this space. And we do need to kind of keep our compliance in order. It helps us sleep well at night. But Nadia, the ATO are getting pretty good at this sort of stuff now in terms of being able to pick up where activity like this is not occurring as it should be.
Yeah, with the STP reporting to the ATO, that STP reporting also goes to the different super funds. So you will receive a notification as well if they pick up that the liabilities aren't paid. It does data matching through STP filing, and the super funds actually also report if they pick up funds haven't been received.
Yeah. So, we can only all assume that with AI and technology these days, the improvements will be there from the ATO in terms of being able to stay on top of this sort of stuff. Okay. Dill, we understand there will be a penalty system that will apply if people don't meet the requirements here. Do you want to just talk us through this traffic light system?
Yeah, so we still have to lodge the super guarantee charge. That's at the SGC in that first box there if super is paid late. However, now the ATO has gone from a admin fee of $20 per employee to up to a 60% uplift, so an administration uplift. That 60% is subject to, or it scales based on how frequently you're not paying super. So from the 1st of July 26, everyone's deemed to be at a clean slate with the ATO in terms of compliance. And then if you repeatedly pay late and lodge SGCs, that admin uplift will eventually keep increasing up to 60%. If super remains unpaid, It's one of the areas that the ATO is able to issue a director penalty notice or a DPN and make the directors personally liable for the same debt as well as the company. And then our last box is ongoing non-compliance. If the SGC is unpaid after 28 days, the ATO can now enforce a 50% penalty on top of the original SGC. Important change, SGC itself was never deductible if it was paid late. That has changed from 1 July onwards, so it's actually a little bit nicer from the ATO. However, the penalties and the top-up penalty, the 50% down the bottom, is all non-deductible. So it does hurt at the end.
And we know the ATO, is just non-negotiable about something like super in terms of the teeth they have to pursue directors around that entitlement. So the penalties are going to stay in play. It is a nice concession, though, I guess, to a degree, that even if they are late, they will be deductible, which is a change from the previous arrangement. Okay, so we're going to talk through now what this looks like in practice. So how are we going to approach this? There's a lot of ways to skin the cat, but we're going to go through some recommendations now to keep in mind. I think, Nadia, a lot of this is going to come down to the admin and the resource you've got around the actual setup of employee details in your accounting software so that there aren't any hiccups along the way. So do you want to just talk through some of the core pillars of that setup for us?
Yeah, I think now is the time to really validate all the super funds. If you know you've got a few employees that you've been chasing for their super fund details, chase them harder, get those details set up correctly before 1st of July. You can request the stapled super fund details on the ATO portal through the business portal if you have already filed the payroll for them through STP, because then at that stage you've already established the employer-employee relationship. So you can request the stapled super fund details from the ATO, which is another way if they do not get back to you. So do that homework now, get it all set up correctly now. And if they do still not have anything, you can set them up on your default super fund that you select for your business. If there was any rejected payments in the past, it's most likely because of a change in super fund details or a merger that happened. When there's a merger of two funds, it's usually just the USI number that changed because it's the product that changed, but the membership numbers will still be the same. So look that up. It's usually in the news when two funds merge, and then you should be able to get the USI number that way. And then just keep in mind the clearinghouse timing as well, so that because it does take a couple of days to hit those funds.
Do you want to just a little bit more of a description around the concept of the clearinghouse and how that works in practice?
Yeah, so if you've got payroll in Xero, because we all work in Xero, most of us do, or some sort of payroll system, it has its own clearinghouse. Xero uses a clearinghouse, so the funds, once you process it, it goes through that clearinghouse, it gets processed and distributed from that clearinghouse, which takes a few days. So if you do process the payment, just have enough time available for that process to happen.
And a good tip there as well around the stapled super funds. And, once you've established that relationship, so you've had a pay run with a particular employee, you will be able to go onto the ATO and pull down the stapled super fund details from there. If you have an employee, which I'm sure many of you do, that just isn't responding to you, not doing their paperwork the way you'd like them to, it's just the reality of the way things go sometimes. So you might have to do a bit of legwork there. Okay, we're going to talk through now what this looks like in terms of a payroll process. So with a little bit of traffic lights here in terms of the easy bits and the potentially quite difficult and annoying parts of this process. So Nadia, let's walk through this step by step.
Yeah, so the process is pretty much the same in Xero Payroll. Xero has already done the update. It's already got that function available at the bottom of your pay run where you can select to pay the super. But as usual, process your pay run, and then you've got that second step underneath the ABA file where you could extract the ABA file where you process super. It will just redirect you to the normal super accruals page in Xero. So the process looks exactly the same. It redirects you straight from there. You process the payments for that period from there. Then the next thing that you need to be aware of, and that's number 3, where I would say the next day go in and double check that status of that batch. Has it been processed? What is the status of that batch? And has it actually cleared your bank account? Because chances are it will hit the super funds then on time. If you haven't seen a change in the status of that batch, just keep an eye on that, because there might be something that will get rejected. And then check for any bounce payments. Xero also has this new functionality where it will give you an error message, or will alert you if any payments were rejected. And it also doesn't reject the whole entire batch. So if it's just one employee, one super fund details that didn't work, you can just fix that one, get the correct super fund details, and then process it immediately, because the 7-day clock is still ticking. When you pick up this bounce payment at day 3, you're already 3 days in. So it's good to get on top of that pretty quickly.
Yeah, absolutely. So the trickiness here is going to be having to stay more on top of whether these payments have cleared or not, and then checking to see if you have any bounce payments. That's probably not necessarily a workflow that you've got in place at the moment, and it's not an automated workflow. So you're going to have to, really, once you do a pay run, you paid the super, it's going to have to be a new part of your process around that to then have these checks to make sure that the super has gone through as you intended. And of course, again, because we have such a limited window of time, we really need to be on top of that. And so that if there is an issue with the funds clearing, you're going to have to get on top of it, straight away, to make sure you've updated the funds details so that can clear. So yes, that is from a process and admin point of view, I think something that's been a little bit overlooked in this legislation in terms of what the admin's going to look like around this process. Particularly important for new employees. So your hygiene around, bringing a new employee into the business and making sure you've got the fund details correct is going to have to be really good. But then outside of that, as you mentioned earlier, Nadia, the merged super funds piece. So it could be an employee you've had for years. It's just that the super funds have changed.
Yeah. And often the employees that are not aware of that merger either.
Yes.
They have no idea.
Yeah.
We usually pick up that there was a merger only once the payment has bounced back, and we do some research.
Yeah.
And then we actually need to find that USI or stapled super fund check is also a good idea there.
Yeah. Okay. Awesome. Thank you. So now we're going to move on to the cash flow piece. And we'll bring you back in again here, Dill. And thanks for answering all those questions in the chat too, mate. That's great. We can pass the baton to you, Nadia.
I'm trying to keep up, but yep.
We thought there might be a few. Okay, so June quarter is probably going to be the big one, right? So we've got June quarter that is still going to be payable in terms of the super entitlements for June quarter. And then we're going to have Payday Super kicking off. And then obviously that's what the new normal will be from July onwards. So do you want to talk about what this hump looks like and what the challenges this poses, and a bit of best practice now as well?
Yeah, so as you mentioned, the awkward part is you're going to be on a quarterly lodgement or a quarterly system for the June 26, which isn't due technically till 28 July, but your first week or the first pay runs within July are due before that. And if you pay, hypothetically, let's say you pay your first week, which might be the 7th of July, you pay that to the super fund, the ATO will actually credit that against the June quarter, so it won't be a complying payment. So I know in all of my clients that I'm going to be having tax planning with, that June super, we're going to be encouraging paying before 30 June as much as possible. Just so it clears the decks from a superannuation obligation point of view, but it also makes it tax deductible in the 30 June 26 year. So you're going to pay it regardless. You're going to pay it before 30 June or by the 28th of July. You might as well bring the payment forward so you get the tax deduction 12 months earlier. And it also then alleviates that awkwardness where you're paying weekly and quarterly at the same time.
Yeah, so there's a bit of there's a best practice. Now, I should say, here's the disclaimer for the whole content, that you do need to talk to your accountant, your bookkeeper. You need to check all the regulations in this space to make sure that your circumstances are considered when you make any decisions about this sort of stuff. But ordinarily, we'd be talking to clients about making sure we're clearing the decks with super coming into June 30 because of the tax planning piece, so that we can incorporate it in the deductions that we're looking at for that year. But there's an extra benefit here in that we're clearing the decks of that super responsibility for June quarter, so we can start July 1 with Payday Super fresh. That's, I think, best practice still, yeah?
Yeah, for sure, 100%.
Okay. All right. And then we're going to talk about the curveball around contractors. So there's a whole lot of content out there, and we've got some articles on our website. If you haven't been to our website, to our resources page, it's got all the events we've run previously, webinars, etc. Lots of calculators, tools, articles. We've written articles before on whether your subbies need to be paid super. We're not unpacking that today. That's a whole other topic. If you do think they are being paid, or if they're being paid super currently, there's a new consideration, I guess, now around Payday Super and how that will play out for your subbies. So Nadia, do you want to talk us through that component?
Yeah, because you'll have to consider the administrative work as well when you're paying subcontractors randomly at the moment and don't have a scheduled pay day every week for them. It will also be applied to them. The day that you pay their invoice is the day that you'll have to submit their super payment. You'll have to run an unscheduled payroll for that with no earnings, just the superannuation amount, in order for that to hit into the super accrual, so you can pay it through auto super, through Xero. So definitely consider that. If you have subcontractors that you pay on a set day every week, it will probably be easier for you from a payroll administrative way. If you do it every Tuesday, you'll just also have to do that calculation and the payroll for the subbies after paying their invoices at the same time.
Yeah, so there's this extra kind of peculiarity, I guess, around subbies that, you're going to get an invoice. It's going to have material and labor probably. So you're going to have, you'll need to be paying that in total, but you'll then need to run a separate no earnings payroll as you ordinarily would, quarterly, to be able to pay super. That'll have to happen as you pay the invoice now, so that you can kick off the super payment component of things.
Yeah.
So because of all of that noise, now is probably a better time than any to start picking a date, and that's when you pay subbies, and making sure that everyone in your ecosystem knows, that's how you operate. We know that some people already do this. A lot of people already do, and it is best practice to go that way. But if you're not, now's a good time to start thinking about it. It will just make life a bit easier in that space. Okay, so cash flow reality. Dill, back to you. We know that this shift from going from a quarterly model to often in this industry weekly is going to put pressure on cash flow. Obviously, that's because that money has often stayed in the business and been used as working capital and for purposes like that. Yeah.
Yeah. Yeah, I mean, obviously this industry being building construction, I think we touch on it a little later as well. It's not the most streamlined when it comes to income coming in. There's obviously stage payments, which isn't tied to a week or a month. And then obviously if we're going through a larger, QS claim, it's delayed from when the money actually comes into the bank account. I guess the opportunity though is Payday Super will force you to pay something you're already obligated to do it in a more frequent time, where whenever I meet with a client or I'm talking about what amount we cannot afford to not pay, it's always superannuation, because the ATO will bypass any company protections we have and make the director liable in any case. So that one, whilst it'll be an admin burden to go through and make sure our subbies are paid and all the questions in the chat about that, it is going to be better in the long run. It's just the first initial period where we've got a quarterly for the June in the current quarter we're in, and then we go to weekly from July onwards. We just have to be super mindful of cash flow from that perspective.
Yeah, so we're clearing our liability as we go, rather than that hanging over on a quarterly basis. And for some operators, it becomes quite a mountain to jump over, particularly if it starts becoming late, penalties racking up, that sort of stuff, and then not deductible. Now it is deductible, but maybe it becomes a better thing from a cash flow perspective although there is this administrative burden that's attached to it. So maybe a little bit of a silver lining there. As you mentioned, for many industries, this will be difficult, but particularly for building and construction, because of the nature of money coming into the business. Project accounting is lumpy, and so therefore, you're going to really have to provision and do cash flow planning so that you've got those funds available when pay run is happening. Yeah.
Yeah, 100%. And this is going to change from if we're talking to a builder, a commercial builder, a resi builder, if we're talking low scale, high scale, like how big the claims are, if they're, paid weekly, monthly, even if their payment terms are end of or 14 days from end of month. Like you've got to be really mindful of what your payment terms are for you getting paid. So from your customers versus what your supplier claims are. So your month end accounts like Reese, Bunnings, whatever it might be. So they're 7 days from month end. We might need to look at how we stretch that out. So we make sure that employees are met, where our super obligations are met, and then we make sure our accounts payable can be on the back of our money coming into the company or the business.
And Nadia, I think, and we talk about communication with the team in a minute, but this idea of running a separate payroll just because we didn't get the timesheet right or there's something that was missed, etc. I think, given this process is going to be much more involved, we'd be advising people to try and avoid these additional variable payrolls wherever possible.
Yeah, we see it all the time, and it's going to delay the process as well with paying that super. So, but I would say once you do that unscheduled payroll for that adjustment, that's when that 7 day starts. It's just going to be more administrative load for you, more processing. So you want to streamline that whole process, get everybody paid and the same go.
Yeah. And obviously, those entitlements obviously have to be paid. If there is time not captured properly, that still needs to be paid out. But consider aligning that with the next pay run rather than doing an ad hoc pay run just to make up for those changes.
Yeah, because we can't really withhold wages at all.
Yes.
But if there's an incorrect timesheet entry of 1 hour or 2 hours, I guess where it's reasonable, you can arrange with the employee to include it in the following payroll, just to sort of streamline your processing a bit. But ideally, you want to get them to have the timesheets accurate and all the payroll data accurate for payroll day. If you need to look at your payroll calendar and maybe schedule a day in between where the pay period ends and when you actually pay the wages to allow you that additional time for the payroll processing and the super processing, that might also be a good idea to do that. So it's not a panic on the day.
Extra bonus tips there from Nadia. Good stuff. Okay. So what should you do? We've got some recommendations here in terms of making this potentially a better part of your world. So initially, maybe it's time, if you can, starting to think about switching to fortnightly or monthly. I know that may not go down well with everyone, so obviously there's a lot to consider there, but it would help things from an administrative perspective to be able to not have to do pay run like this every week. That's not always possible, but it's a recommendation. Dedicated weekly subby pay run. So Nadia, we've talked that one through in quite a lot of detail. Maybe do you want to talk about setting firm rules with the team, following on from that unscheduled pay run piece?
Yeah, I mean, you could also have the conversations with your subcontractors now. Maybe your subcontractors are currently used to just being paid 7 days after their invoice date. So that can be very random at times. If you have an agreement in place with your subbies that you pay a set day every week, then they can expect that on that day to make the admin load a little bit easier. I would say a lot of businesses are considering moving from weekly payroll to fortnightly or monthly. Also, to do it all in one go, less administrative work. You're going to have to set those rules with your employees on being disciplined with their timesheet entries, not having to chase them or not having to do so many adjustments after the payroll has already been done and left your bank, because you're going to have to go through the whole entire process again for 2 or 3 missed hours.
Yeah.
So now would be the time to have those conversations.
Yeah. And so, yes, it might be worth sending out something on email or text, your preferred method for communication. But people just glaze over with a lot of this stuff. So I would recommend trying to, if you do have, toolbox meetings or the like, this is exactly the sort of topic that needs to be brought up with people, and wherever possible, eyeball them so they know that this change is coming, and we all need to be on the same team to make sure it goes smoothly. Again, finalise June quarter responsibilities before the 1st of July so that you can get the deduction into that year, but also you're starting 1st of July with a clean slate for Payday Super. And really, there's no reason why you can't start paying Super now. So doing Payday Super now, I certainly would recommend trying to do it before July 1 so you find out some of the kinks in the process, so that this transition can happen as smoothly as possible. Okay, the action checklist, I'm just going to reel these through. So you need to review your payroll processes. You need to work out that process that we went through before, make sure that you're set up for it, and make sure that whoever is looking after your payroll is ready to go, with particularly some of those newer processes around checking that funds are cleared, and the subbies piece as well. As I said, including this process to check bounce super. So making sure that you're all over that and making sure that if it doesn't clear, you're ready to act. Nadia, people still haven't enrolled automatic super in their software. Do you want to just quickly touch on that?
Yeah, so the ATO Small Business Clearinghouse will be closing, as some of you might already know. So it's a good time now to enroll for the Auto Super in your software. Depending on what software you are using, it's very easy to enroll for it, and it also does the calculations for you. No manual uploading to your bank account. I've also seen some clients that actually pay through their supplier payments, the super funds directly, which I would say is probably not the cleanest way. It can also be time consuming and things can be missed. If you are able to, with your software, just enroll for automatic super, makes the job a lot easier. Yeah.
And if you don't have a cash flow forecast already, you need one. And if you haven't updated it to cater for Payday Super, you need to do that if you already do have a cash flow forecast in place.
Yeah.
And obviously we're sort of recommending a buffer as well around payroll so that you've got the cash set aside for that purpose. Okay, resources. We're almost at the end here. So we've got an article. We'll send that around afterwards so that you've got that in email that we send around. We have a cash flow template. It says insert there. That's not going to happen. We're actually going to send it in the email that comes out. So we'll send around. It's a construction-specific cash flow template that builds up job by job when the claims and costs are hitting over time, and then rolls up to a cash flow position. Other resources, there's actually now plenty about in terms of the software providers and other players in the market who've got content out there. A cheeky little recommendation, if you are starting to get over the fact that bookkeeping, payroll, all of this stuff is taking you away from running your business and doing, higher leverage tasks as a business owner or someone operating the business that you'd prefer to be getting on with rather than dealing with this sort of stuff, it might be time to think about outsourcing. Plenty of good operators out there. Nadia and her team are exceptional. Okay, we're at the end of that bit. I'm just going to run a quick poll here. This is a poll where we make a consult request available to you guys, whether you want to outsource bookkeeping to an industry specialist. So if you're interested in a conversation with us about that, engaging a fractional financial controller. I talked about that service at the very beginning. This is where we do budgeting and forecasting. We produce a monthly reporting pack so you can see how your margins are traveling month in, month out. And we do a full month-end close for you. So WIP adjustments, all of those sorts of things are run by that service. And then a fractional CFO. I didn't talk much about that. This is someone with strategic oversight for the business, a lot of the time around things, not just in the financial stack, but also operationally helping you grow both the top line and the bottom line. I'll just let that run. I mentioned we have some events coming up. So we're running a strategic planning workshop. It's in our second cohort going through at the moment. This is half a day, once a month, over 3 months, and you build your actual strategic plan for your business in that session. It's a very small group. There's only about 10 to 12 other construction business owners in the room. So it's a nice closed group, and you will learn as much from your peers as you will from us. But ultimately, you'll build a plan for your business. The other one I wanted to mention, very topical for something like we've talked about today, financial clarity for construction businesses. So what are the non-negotiables that you need to get in play so you can see exactly how your business is traveling financially? We go through things like setting up the purchase order process, how to set up job costing, back costing, how to reconcile so that all your accounting software is connected properly to your estimating and project management software. So it's an end-to-end half-day in-person. We will be running the in-person events in the Sunshine Coast as well. We're opening an office there at the moment, and in Melbourne as well, and soon in New South Wales. Okay, that is it. Thank you very much, everyone, for joining us today. We will send around the video. I think we've answered quite a lot of questions there through the chat. Hopefully you had your question answered. We're always happy to talk, so reach out if you need any further info or you want to talk to us about any of the services we've talked about today. Thanks, Nadia. Awesome,
Thank you.
as usual.
Thank you.
Really know your stuff. And Dill, thank you, mate. Thank you for your contribution as well.
Thanks, Phil. Thanks, guys.
And we'll see you on our next webinar. Talk to you soon. Bye.
Bye, everyone. Bye.
Bye. Bye. Bye. Bye.